are these developing world central banks really that powerful? I mean, to shoulder the entire global economy?
I don't think the developing world central banks will necessarily be shouldering the global economy, but I do think at the margin it helps. And it's interesting, this divergence that we're seeing where the developed market central banks are currently in kind of this on-pause mode, but definitely with an easing bias still. And yet emerging market central banks show that they clearly still have some capacity to cut rates further. And to us as fixed income investors, that looks attractive, particularly in the local rate space, where you can get relatively high real yields, at least on a relative basis, combined with this continued easing policy from the central banks.
Marika, good morning to you. So I wonder what this does. If we do see emerging market central banks cutting interest rates, then maybe that's positive for their own domestic economies, shoring up growth, but it eats away perhaps at that yield differential if developed world central banks aren't doing cutting and are finding other ways to stimulate their economies. So what does that do to the relative attractiveness of EM debt?
Yeah, again, on a relative basis, we do still think it's attractive. So if you look at the overall EM local index at the broad complex level, real yields are less than 2%. So again, that doesn't look outrightly attractive. But there are individual countries where you can still get yields in excess of inflation of 3.5% to 4%. And again, you compare that to where we are in the developed market world with significantly negative real yields. Everything is a relative game. That looks attractive to us still.
And where are those yields going?
We think that yields over the long term will continue to go lower. So from more of a strategic perspective, we think it continues to be a very positive environment for fixed income broadly. So we've got an environment in which central banks definitely are not hiking anytime soon, combined with the weight of cash really propelling investors into fixed income markets. And we think, again, over the medium to long term, that will send rates even lower.
And where do we think, I mean, the pile of EM debt, Matt was talking yesterday to the IMF's new managing director, and talking about the level of debt that we see in emerging markets at the moment. And she did acknowledge that she is worried about that, all of that accumulated debt. And she suggested that the low interest rate environment was encouraging more and more debt, and that perhaps those economies shouldn't get used to it because financial conditions can tighten. Is that something that worries you, maybe with a longer term perspective?
Potentially with a longer term perspective, but I think not necessarily in the near to medium term. As these economies look to develop and make their way through that progress, they can take on further debt, and there is a lot of scope for that still.